Do you think now that we have to open the gates on regulation, like the whole point of crypto in some ways was, trust nobody and, decentralization is the key. But here what we see is a lot of people were tricked into trusting FTX and having their deposits there. And it was a centralized exchange, which caused all these problems. So it's like, it almost violates the principles of what the whole product market fit was supposed to be. So what should sort of the observer expect? And what do you expect as a business in terms of how governments now react to all of this? I think the problem is bigger than FTX. And I'll say the uncomfortable part out loud, and nobody needs to necessarily comment if you don't want to. But there were an enormous number of venture firms that hawked their way into just completely doing zero work. I mean, the tip of the spear is this thing. Well, who's the guy that works at Founders Fund? Bulgar. That tweet that he had where he basically took the snapshot of the Sequoia transcript was one of the funniest things that I've ever seen. I mean, this was a $215 million decision. And Sequoia documented it and put it on their own website. And I think that's an example of something that was happening, which is people just looked the other way and didn't even want to do the layer of work. A lot to unpack, but maybe we can just take a step back, and for the uninitiated or for the person who's only been just following this very superficially, can you just in a nutshell explain what happened?
Yeah, so my understanding is, and again, this is from people I've talked to, and I spoke with Sam and CZ briefly during this, but I didn't get details from them. I got it from other people. I spoke to Sam about, he was trying to raise emergency financing and things like that. And I spoke to CZ about why he was considering buying the asset. I thought it was a bad idea. But my understanding of what happened at this point, and again, I don't have all the facts. This is just my understanding, is that, FTX was in a position where they had this market maker, Alameda, that was investing in risky things. And that's fine. Like market makers, hedge funds, they're designed to take more risk. It appears at this point that back during the last shakeup in the crypto industry where, Terra Luna and Voyager and Celsius and Three Arrows went under, it appears that Alameda took a big loss at that time as well. They may have even been underwater. And instead of just saying, hey, this hedge fund's going to blow up too, which would have been unfortunate. People would, Sam would have lost money. It's embarrassing, but it's not illegal for a hedge fund to blow up. It happens with some regularity. Instead of just letting it blow up, it seems like at this point, he took customer funds. So it seems they had this solvency issue. And instead of just letting it blow up, Sam basically said, hey, we have a bunch of customer assets over here at FTX, or he somehow basically made a loan from FTX into Alameda to try to prop it up. I don't know why he did that. I mean, that's the moment in my mind where he crossed the line into probably committing fraud. And I think he probably lied to users, lied to investors, and he went around and tried to bail out these different companies like Voyager and BlockFi and to sort of prop up this thing, and maybe he thought he could trade his way out of it or something. I'm not sure, but that seems to be where the mistake was made.
This happens in the public markets a lot as well. So like when you see heavily shorted names, or when you know that certain hedge funds are on the brink, other hedge funds will go in and essentially force a margin call and a stop out, because then it's what causes all of these runs. And if you look actually inside of GameStop, the reason why you got all this gamification in the GameStop equity and a bunch of these other names was in part because of this dynamic. Folks that are highly levered, folks that don't have the right matching of risk. And what happens is they're solvent but illiquid. And then if you run the instrument into the ground, they both become insolvent and illiquid all at the same time, and the whole thing explodes. Brian, the question is, now that we know what happened, which is all of these crazy inter-party related transactions and, all of this stuff seems very illegal. There was a bankruptcy filing today, and up until today, it seemed like this issue was really about FTX International and Alameda, and it didn't touch FTX US, which for a long time tried to position itself as, well run and regulated as Coinbase. To be, they tried to say that. But now, if you look inside the Wall Street Journal, all the articles say that this is actually FTX Group, so the whole thing seems to be imperiled. Can you just help us explain that? Because now that's a lot of US people that were following the rules, thinking that this thing was matched one-to-one, that may be also affected.
Look, I don't know who inside FTX's and its orbit of companies actually knew that the fraud had been taking place. It would not surprise me if FTX US people and employees had no idea that this was happening. I'm imagining if Sam was when he started doing this, he probably wanted to keep it to a very small group. Otherwise, this is the kind of thing that leaks and the whole thing blows up. Now, that being said, I don't necessarily think FTX US is worth anything as a business right now because of the brand being so tainted. And there probably was not great separation of these entities in the sense of, like, did they have truly separate boards and beneficial owners and governance? And Sam seems to have, it appears that FTX didn't really have a CFO or maybe even like a real board or anything like that. And so it's hard for me to imagine.
We found on Reddit, there was an article that appeared that said that the head of compliance at FTX was also the head of compliance at a poker site called Ultimate Bet, which in the 2010s did this exact thing, apparently. Some version of this where they went in and they looked at hole cards of poker players, and then a few employees inside the business would basically play against these folks knowing what the hole cards were, ran this cheat, stole millions of dollars. So now what happens now is you have the international business and the US business and Alameda Research all rolled up into this one frozen entity, right? So do you know what happens in a process like this? Like, is it that the DOJ and the SEC get priority, or is there some international monetary, like who unwinds all of this? How do people get their money back, if at all?
So I'm not an expert at this, but my high level understanding is that the bankruptcy court will basically go through and try to find any assets of value. So, I mean, they still have some tokens and value. They have a venture portfolio. I think Sam owned 9% of Robinhood. There's various things that they may own. And then they'll kind of auction those off to various bidders on distressed assets and then try to distribute those funds to the customers. I don't know the exact process beyond that, though.
I mean, if you remember, the Madoff wind down took many years. And for years, he was trying to find assets, and then he found a market, sold them. There's the trustee. I think he's still active. And then, was tried to redistribute the funds. Obviously, so many more customers here than there was with Madoff, but it can be a very long and winding process to identify all the assets, then run the market sale process on them, then figure out who gets what first, and then distribute.
There was an interesting thing that Larry Summers did, I think, for Bloomberg, where he was asked whether this was Lehman or Enron. And he said, it seems more like an Enron than it is a Lehman. And Brian, I'm just curious how you think about it. Like, is this sort of a fraud perpetuated by a group of executives to essentially take advantage of a situation? Or do you think that this is more like a Lehman situation, which is a well-run business, I guess, that just, got caught in a liquidity trap?
My guess is it's a little more like Enron in the sense that, I mean, yes, they were over-levered and that kind of thing, but the minute that they moved customer funds in some way, shape, or form to backstop the hedge fund, that was, in my mind, fraud. And, that's more like Enron.
Do you think now that we have to open the gates on regulation, like the whole point of crypto in some ways was, trust nobody and, decentralization is the key. But here what we see is a lot of people were tricked into trusting FTX and having their deposits there. And it was a centralized exchange, which caused all these problems. So it's like, it almost violates the principles of what the whole product market fit was supposed to be. So what should sort of the observer expect, and what do you expect as a business in terms of how governments now react to all of this?
Well, I think it's really important to distinguish between the centralized players in crypto, which are custodians, exchanges, etc. Coinbase has a big business there, and the decentralized players. The centralized players should be regulated, and today they're regulated already like kind of traditional financial service businesses. But they don't have the regulation clear when it comes to the crypto aspects. So for instance, in the US, we actually don't still have clarity about what is a commodity, what's a security, which one should CFTC regulate versus SEC, that kind of thing. And that lack of regulatory clarity, and frankly, the climate of regulation by enforcement, the negative rhetoric from Chair Gensler in particular, has created this sort of chilling effect in the US that has pushed a lot of that centralized actors' activity offshore. In fact, 95% of the trading volume in crypto is now outside the United States, and it's come down a lot since the beginning of this year even. Now, the decentralized players, self-custodial wallets, DeFi, Web3, this is where crypto really has an opportunity to make a more fair and free and transparent system, because you can go look at any smart contract to see exactly what it's doing. Anybody can audit the code. If you have a self-custodial wallet, you can just trust yourself. You don't have to trust any other intermediary out there. And that's where you get true decentralization. And I think that's actually, now, those areas still have a couple of their own challenges. Sometimes people will lose their password or their phone and they'll lose their own money. So if you're trusting yourself, you have to trust, that you're going to do that piece correctly. But there's a lot of good things we can do there around making social recovery mechanisms and MPC wallets and things like that.
To me, it seems the whole issue, if you come back, like what is the first string that you pulled that unraveled the sweater, was the fact that these tokens were created out of thin air. They had no meaningful value. Somebody prescribed a value, and all of a sudden, everybody else in the economy all of a sudden said, yeah, I'll take that as collateral. Look, you cannot do that in the regular world. Brian, explain, like there's a ton of these tokens that have been engineered, and there's been a ton of these tokens that have been sold. So what should people do that own these things thinking that there was going to be some safety or value, or like, how do you think about all of these tokens that could be as basically as fragile and shitty and worthless as FTT?
There is this concept of like an exchange token, and there's a couple other firms out there that have them, and that's something we haven't done. And I think you're right. Like the actual utility of those things is a little questionable. But look, I don't want to throw out the entire concept of people creating tokens. I think there's actually a lot of good stuff there, and it comes down to this idea of if you're trying to raise money for your company and through a token, that's fine. That should be a security. And there should be a regulated way to do that in the US. Like go register it with the SEC, let it trade on broker dealers. That's what we've been wanting to do for a long time. And the SEC is taking their time getting there. They don't, Gensler, to be honest, he doesn't seem that excited about the idea of this whole industry existing. And so anyway, but it should exist, and it should be happening in a regulated way. So if people want to issue a token that's raising money for a company, let's regulate it as a security. If they want to issue a token that's truly on a decentralized protocol or has some other purpose like voting in a DAO or rewards or something like that, then that's probably not a security. And let's be honest about that and allow those things to trade in a different environment, a different regulator under the CFTC. So again, I'm speculating here. I mean, I've spent time with him. I've met him a bunch of times, and I have to say, I did not see this coming. Like he appeared to me to be a very bright, credible, competent person. Perhaps a bit young, perhaps, a bit reckless at times, but not unethical and not committing fraud. I definitely did not see that. If I look back to see, were there any warning signs that I should have thought twice about it? One of the things I noticed was that in 2021, Coinbase had a good year. We did $7 billion in revenue, $4 billion of positive EBITDA. We became public as a company. At that time, FTX did about $1 billion in revenue. And I knew how much money we had for our venture budget and just like different investments we wanted to make. And I knew their revenue. And I had to scratch my head a bunch of times. And I was like, where is this guy getting all this liquidity? Because he was like buying 9% of Robinhood. He was putting like $1 billion into this. He was donating to all these politicians. And I was like, it did not make sense to me where he was getting all this cash. People just kept telling me, oh, his market maker Alameda is just printing cash. I guess like, okay, I guess, it seems like a conflict of interest to own an exchange and a market maker. That's why we haven't done it. But more power to him, I guess. And so I was surprised. I didn't speak up. I can't explain the psychology of it at this point, whether he's a pathological liar or if he's started off good and somehow under the pressure of this whole thing went bad. But the minute you can go watch the interviews, he's lying to people about why he's bailing out Voyager and BlockFi, and he knew at that time that most likely he knew at that time that they were not solvent. Alameda was not solvent, and so that's where he crossed a major line in my book.
I'll tell you an even more explicit signal. He pitched us in that $17 billion round, and I did a Zoom with him. And after the Zoom, I'm like, this doesn't make much sense, but I'll have my team do some work. We did some work, and we sent him a 2-page deck. And we said, here are our recommendations for taking the next step. One was the formation of a board. The second was the creation of dual class stock. The third was some reps and warranties around affiliated transactions and related party transactions. And the person that worked there called us back and literally, I'm not kidding you, said, go fuck yourself, was quote unquote the response to us. We're like, okay. So that was the easy decision. But I still thought, okay, I'll just put that in the bucket of these guys are unbelievably arrogant and smug. But Brian, I thought what you thought, which is, maybe it's because they've created some money-making machine in the Bahamas, and so they have that level of confidence. But then to see this thing to the extent of which is now, we're only scratching the surface, guys. We're going to find out stuff every day.
I hope that they use this as a moment to come together and help, local companies in the US being built here to end up in a better place. And I do believe, David, I think said it's right. It is a political issue at this point. There's going to be a major impetus to get the clarity here in the US and hopefully to help build the companies here in the US that are going to serve the rest of the world and in every major financial hub. So we're committed to building that together with all the regulators around the world. And crypto's here to stay. This is a temporary setback, but I'm here to keep building and make this thing happen.